Welcome to the Crypto Prism channel. Let's first look at Bitcoin on the 1-hour time frame. Overall, this segment of price action is a weak, choppy move to the downside. It hasn't fully finished dropping yet, but price is currently battling at a key area. Let's talk about the structure first. From the previous high, around 107,400 all the way down, the overall move is a very standard one-directional downtrend. It's a rhythm of rebound, then weakness, rebound again, then more weakness. What you're seeing now is not a strong sell-off or an accelerated capitulation type drop. Instead, this is a typical sideways, weak downward grind. In other words, the bulls are not being wiped out instantly, but are slowly being worn down over time. Now, let's look at a few key short-term levels. The first one is the 0.382 level, around 90,000. This area was a core resistance zone where price rebounded multiple times before. You can see clearly. That price can no longer stand above it. And each rebound attempt has become weaker and weaker. What does that tell us? It tells us that this level has shifted from a battleground between bulls and bears into a clearly defined bearish resistance zone. The second level is the 0.236 level, around 86,900. The current price is stuck just below this level, moving sideways repeatedly. Pay attention to one detail: rebounds are weak, but pullbacks are very smooth. On the 1-hour time frame, this is a very typical bearish continuation pattern. Simply put, if this were a strong market, price should have already pushed higher from here. But that's not what we're seeing. The current rebounds are choppy, meant to confuse direction, while the real direction continues to pull lower. Looking at the most recent 1-hour candles, you'll notice a very clear characteristic. The highs are continuously moving lower, and the rebound structures are incomplete. The downward legs are cleaner and more decisive than the rebound legs. This is the classic combination of weak rebounds and strong pullbacks. In other words, every rebound candle is confirming that bears are still in control here. So as long as price does not return above 90,800 and hold above the 0.382 level, there is only one short-term bias. Sell the rebound. Now, let's take a look at the 4-hour chart. We can see that Bitcoin is still trading within a clear descending channel. Highs continue to move lower, and lows are also moving lower, which shows that the overall structure is still bear-dominated. Before price can effectively break above the upper boundary of the descending channel, any rebound we see should only be treated as a technical rebound within a downtrend, not a trend reversal. Below, we can clearly see an important support zone, roughly between 83,700 and 81,400. This was an area of heavy previous trading activity, and a zone that price has tested multiple times recently and temporarily held. If this area is lost, downside space will open up further. On the upside, resistance is mainly concentrated between 88,000 and 90,000. This zone is both a previous structural resistance and an area where multiple rebounds have failed. I've also overlaid Fibonacci retracement levels, drawing from the high to the low of the previous decline. You can see that the current rebound is mainly being capped between the 0.382 and 0.5 levels, while the 0.618 retracement lines up perfectly with the upper boundary of the descending channel. This kind of confluence between Fibonacci levels and trend lines often forms a very strong resistance zone. Taken together, Bitcoin remains in an overall weak structure until price can stand firmly above the Fibonacci 0.618 and break out of the descending channel with confirmation. Any rebound should be treated with caution. The current movement looks more like consolidation within a downward move rather than the start of a new uptrend. From the daily chart perspective, Bitcoin is still trading under a clearly defined descending trend line. Every rebound attempt has failed to break above this trend line, which shows that the bearish structure has not been invalidated. At the same time, a consolidation channel has formed below. The upper boundary of the channel corresponds to short-term rebound resistance, while the lower boundary represents the key support at this stage. As long as price fails to break above the channel top and reclaim the descending trend line, the overall structure remains a consolidation within a downtrend, not a trend reversal. This blue descending trend line is currently locking in the rhythm of the market. Fibonacci levels are critical. The 0.382 level around 98,027 is strong resistance. Previous rebounds that touched this level were immediately rejected. Right now, price is stuck near the 0.236 level within the blue consolidation zone, which is a textbook bearish continuation pattern. In the short term, don't rush to bottom fish. If price rebounds toward the 98,000 area, it can be an area to position shorts. If price breaks below the lower boundary of this consolidation zone, the next support to watch is around 80,000. That's all for today's video. If you haven't followed the channel yet, feel free to subscribe. See you tomorrow.